Welcome back. You're tuned in to Bazaar Morning Call on CNBC-TV18. As promised, let's invite our first management. We have Gulf Oil Lubricants. That's the first management on the show. Remember, they reported a strong set of numbers in Q2. Volume growth came in at around 15%. In fact, their EV charging subsidiary, Tyrex, the revenue out there surged more than 70%, came in at ballpark around 40 crores. To discuss this and how's the outlook for the second half of the year, we have Manish Gangwal, the Chief Financial Officer at Gulf Oil Lubricants, who joins in. Hi, Manish. Good morning. Good to see you in as always. Well, let's talk a little bit about the past quarter's numbers. 15% volume growth, that's good. Revenue growth, however, was only around 12%. What's the reason for that? Was there some kind of pricing pressure? If you could help us out with that, pricing pressure in the past quarter. And what is the volume growth for the year? And also on margins, it was impacted due to the rupee depreciation. What's the margin guidance for the year? Volumes, pricing, and margins. Go ahead.
Good morning, Prashant. Always pleasure talking to you and Nigel. So our overall core lubricant volume growth has been, 9.5%. And compared, there is a category called AdBlue that grew 24%. So overall, you are looking at a number of 15%. But AdBlue is a lower price, more of a commodity item. So our core lubricant is what is really comparable, and that's 9.5%. Against that, we have grown our revenues by nearly 13%. So there is an improvement in the product mix and there is an improvement in the realization, leading to a 13% revenue growth on a 9.5% volume growth.
Oh.
So that's the right comparison from volume and revenue perspective. And of course, coming to your second part of margins, crude was very stable during the quarter, but foreign exchange, the rupee depreciated sharply in the quarter July to September, and that too led to an increase in the input cost, blended input cost. Please remember, we import nearly 70% of our raw materials, and that's why there was some pressure on the margin side. We have taken pricing calls selectively in certain segments and try to pass on. But there is some time lag between when you realize fully the price increases. So overall, from margin perspective, rupee played slightly negative on the margins. Mm-hmm. But overall, on volume side, fantastic double-digit growth, and revenue growth was also quite double-digit.
So you're saying that, for the year, we should be working with mid-teens volume growth. Would that be fair? And margins holding at around this 12-13% mark?
So typically, we grow 2 to 3 years the industry. Industry of lubricant grows 3 to 4%. And we have been growing double-digit, near double-digit. So our core lubricant growth, we continue to maintain that we should end the year at double-digit volume growth. Okay. And AdBlue, of course, is a factor which is we are also trying to grow nearly 10 to 15%. So on volume side, yes, double-digit volume and revenue growth.
And but double-digit, sir, double-digit when you say, some more color. I mean, are we talking about the high teens, or is it going to be closer to the, 10-11% mark? What's the sense on volume growth and then overall revenue growth as well? Because this quarter, what the issue was that your volumes were growing, but the revenue growth was not, in the same clip. So what should we expect for H2?
So as I explained, Bharti, our volume growth was 9.5% in core lubricant. And we grew our revenue by 13%, which was higher than the volume growth. And overall, we believe that since the industry is growing 3% to 4%, and we grow usually 2 to 3x, we maintain around high single digit to 10 to 12% volume growth for the year. That's what our projection is for the full year.
Got it. All right. Let's focus on another smaller part of your business, which is growing very, very well. Tyrex. What's the revenue guidance for the year? If you could give us a ballpark number. I think for the first half of the year, you've already done close to around 68 crores in terms of top line. Last quarter was good, 40 crores or thereabouts. For the year, what do you aim at doing? And is it profitable?
Sorry.
Tyrex.
No,
Question on Tyrex.
Yeah, on Tyrex, you see, we have grown 75% in H1 on the revenue side. So H1 revenue was 42 crores. And last year we had closed the year at 80 crores. It's a very fast-growing segment. We have acquired this company, Tyrex Transmission, which is based out of Ahmedabad. We increased our stake actually during the quarter, and we have completed that transaction. Now we hold 65% in Tyrex, and we believe that this company is poised for a very fast growth. And of course, for the year, we are aiming to cross above 100 crore in terms of revenue for sure. But on a near medium-term basis, we believe that this company can touch 300 to 400 crore revenue in next 3 to 4 years.
3 to 400 crores. And will you go ahead and increase stake? I think you mentioned it's 65%. Will you want to go the entire hog and, buy the entire 100%?
See, we have all the offer clauses, but founders are running the company. They have been instrumental in technology, and they have made this company where it is. So we are continuing to work with them, but we have all the clauses at appropriate time to exercise.
Mr. Gangwal, hi. Morning, Prashant here. Lubricants and the business of AI and data centers has been this talking point. I remember having this conversation with Mr. Chawla, and he had indicated that you're working on, I guess, 2 products, right, for data center cooling, and as an opportunity size. Any update there? Is something happening? Because of course things there are moving so rapidly. The spends are mind-boggling. So in terms of cooling, of course, is an important constituent of all of this. So any update you can share with us?
No, so I think you're right. We have 2 products already in the pipeline, and we are looking for a POC to be done on those. You see, we have been of the opinion always that data center, while it's an interesting segment going forward, but from the size of the market perspective, it is going to be less than 1 to 2% of the total lubricant market, even at its peak, when every data center is liquid cooled as against air cooled, which is a very unlikely scenario. The overall volume impact is going to be very, very minimum from the industry perspective. But yes, this is a futuristic product, and we are looking for a POC. India, as per our understanding currently, is not moving very rapidly in terms of liquid cooling data centers. But yes, there is a perspective for future, which we are already trying to, get the POC done at 1 or 2 places.
Okay, proof of concept, basically, right? So 2 products and got that. But fair enough. We'll leave it there and wish you all the best of luck. But good conversation, Mr. Gangwal. Thank you very much for joining us here on CNBC TV18. So that's the overall picture with regards to Gulf Oil Lubricants. We'll take